Welcome to the deep dive. Today, we're jumping into a really core process for almost any business.
Procure to pay. P2P. Yeah.
Exactly, P2P. We're aiming to give you a quick but, solid guide to how you actually buy stuff in a company.
Mm-hmm. Demystify it a bit.
Yeah, cut through the jargon, get to the essentials.
Yeah.
So let's dive in.
Sounds good. We're basically mapping out the journey from needing something to paying for it, making sure it's done right.
Okay, so it kicks off with a purchase requisition, right?
Yeah.
What's that first step about?
That's the internal flag, basically. Someone inside the company, maybe a department, says, hey, we need this.
Like new computers or a service contract?
Exactly, that kind of thing. They fill out a form or request. It's not an order yet, just the initial need.
Gotcha. So the request goes in, and then comes the purchase order, the PO.
Correct. The PO is, well, it's the official commitment.
Ah, so it makes it formal.
It really does. It takes that internal request and turns it into a proper, legally binding agreement with the supplier.
Specifies the what, the how much, the price.
All of it. Quantities, price, delivery details. It's the contract, essentially.
Order placed.
Yeah.
Then the stuff arrives or the service gets done. What's next?
That's the goods receipt. Or GR. It's simply confirming, yep, we got what we ordered.
So checking the delivery note against the PO.
Pretty much. Checking quantity, making sure it's the right stuff, maybe checking condition. It's a key control point.
Right. Then comes the bill, the invoice, which brings us to invoice verification. I hear three-way match a lot here.
Ah, yes. The famous three-way match. It's super important.
Why is that?
It's your main shield against paying the wrong amount or for something you didn't get. You're literally matching three things.
Okay, let me guess. The invoice,
Yep, the invoice that just came in.
the original purchase order,
Correct.
and the goods received.
You got it. Invoice, PO, GR. Do the quantities match? Do the prices match? Are the items the same?
And if they don't,
That's a red flag. Could be an error, could be something else. Needs investigating before you pay.
makes total sense. Now, all this involves suppliers, vendors. Vendor master data must be keyed in,
Oh, absolutely fundamental. Think of it like your address book for suppliers.
but more complex, I imagine.
A lot more, yeah. Accurate names, addresses, bank details, tax IDs. It all needs to be spot on.
Because if it's wrong,
Payments go astray, you might have compliance issues, all sorts of headaches. Clean data is crucial throughout P2P.
okay, data clean. Next, actually paying them. Payment processing. Seems simple, but maybe not.
Well, there's a balance, isn't there? You need to pay vendors on time, keep those relationships good.
But you also need to manage your cash flow.
Exactly. So it's about timing those payments effectively. Not too early, not too late. Finding that sweet spot.
And taxes. Can't forget those. TDSV handling. What's the quick take?
It's just ensuring compliance. For every invoice, you need to correctly account for and sometimes withhold things like tax deducted at source or apply value-added tax.
Non-negotiable, really.
Absolutely. Get it wrong and you're in trouble.
All right. Invoice paid. But there's this GRIR clearing thing. Sounds technical.
It sounds more complex than it is. GRIR is goods receipt invoice receipt. It's basically a temporary holding account in your books.
Okay. Why?
It helps you match things up. You record the value of goods received on one side and the value of invoices received on the other. The clearing process zeroes out this account when everything matches.
Ah, so it confirms you've been invoiced for what you received
Yeah,
and received what you were invoiced for.
precisely. It cleans up those temporary entries and makes sure your main accounts payable is accurate.
And to keep an eye on money owed, there's aging analysis.
Yeah, that's looking at your outstanding bills or payables and seeing how old they are.
Like, who haven't we paid in 30 days, 60 days?
Exactly. It helps manage cash flows, spot potential issues, maybe even shows where you can negotiate better terms.
Then there's also vendor reconciliation. How's that different from, say, GRAR clearing?
Vendor rec is broader. It's like checking your bank statement. You take the vendor statement of account.
Who do they think you owe them?
Right, and you compare it line by line with your own records of transactions with them. Catches discrepancies may be missed at the invoice level.
Okay, makes sense. Now, underpinning all of this must be controls and approvals.
Hugely important. You need rules. Who can request things? Who needs to approve a PO above a certain amount?
Prevents fraud. Stops overspending.
Both.
Wow.
And just simple mistakes, too. Having clear sign-offs at key stages is vital for good governance.
And technology helps here, right? ERP workflow integration.
Big time. Modern ERP systems, enterprise resource planning systems, can automate so much of this.
Like routing approvals automatically.
Exactly. Routing approvals, matching documents, flagging exceptions. It makes the whole process faster, less error-prone, and gives you way better visibility.
Wow, okay, so that's quite a few steps. We've gone from the initial request right through to the final reconciliation.
The full P2P cycle, yeah. 12 core concepts we've touched on.
And the big takeaway,
I think it's understanding that these aren't just separate tasks. They're all linked.
like links in a chain.
Perfectly put. A problem in vendor master data can mess up payments. A missed goods receipt can lead to incorrect invoice approval. It's all connected.
So for everyone listening, the key is seeing how these steps flow together in your world.
And maybe think about where the weak links might be. Or consider the flip side.
What happens if you don't have a clear P2P process?
That's often where the biggest issues and the biggest lessons lie. Lots to think about.
Indeed. Thanks for diving deep with us today on Procure.